And what sFox does is we've gone out into the market and created accounts with most all of the big name exchanges, OTCs, and market makers, so that when you come to us, we aggregate all of that liquidity into a single pool to where if you're trading on sFox, you get access to the best price no matter where it is, right? So we have the smart routing tech in the background to route your order to Coinbase if that's the best price, or to OKX, or to Bitfinex, or to any number of places.
Welcome back to the Compass Mining Podcast. My name is Jarrett, and today I am joined by Daniel Hinton of sFox. We're going to talk about what sFox is doing, what Daniel has been up to, and we're going to talk about UTXOs. It is a conversation that I feel like happens a lot in mining, and to talk to a professional about it, that's just the true alpha. So, Daniel, thank you for joining. How are you?
Hey, Jarrett. Doing very well. Glad to be here.
Excellent. And off mic, we were talking a little bit, and I know that you're out of Nashville. I didn't mention this actually off mic, but now that we're on mic here, let's do this. I was recently in Denver at the launch of the Space Denver, which is, I don't want to say, I'm trying to pick my words carefully, but it is a continuation of, I think, the energy that Bitcoin Park has brought to Nashville, right? So they're trying to do that in Denver. And this has nothing to do with sFox or UTXOs, but do you spend any time at Bitcoin Park? Are you a member there? What's that like? Having a community space like that in your local neighborhood.
Yeah, I do spend time up there. I'm not a member, but they as far as production quality and just the quality of content and people and conversations that happen up there, it's really top notch. I mean, they have basically their model is each month they have a different theme. So it might be, Noster November or Mining March or whatever. So they kind of have a set schedule of things that are the topic for the month. And they have recurring things that are really good for bringing in both, brand new people off the street who just know the word Bitcoin and nothing else, or, global experts on basically every topic you can think of. So it's great. Yeah. And I think, meetup culture and meet space things around Bitcoin are, they're one of the things back when I lived in Raleigh that was the most helpful for me and really beefing up my knowledge and asking the questions that you don't want to ask on Twitter that are going to make you sound stupid. And Bitcoiners are very nice people in person, and they love talking about Bitcoin more than anything. So it's a really good atmosphere for just the knowledge base that you can gain.
It's interesting you say that they're so nice IRL, because that's been my experience too. And on Twitter, people are brutal. If you half step, they'll come after you with the pitchforks. You meet those same people IRL and they're like the nicest people on the planet. So one day maybe we'll cross that chasm. Speaking of another chasm, just as we're recording this, we're saying this off mic as well. If we interrupt this recording at any time, it's because a seminal moment has occurred. We're recording this on Thursday, November 21st, around 2:20 Eastern time. I say that because Bitcoin's around maybe $99,000. And so if we get to $100,000, we will probably, feel free to interrupt me. And hopefully if I interrupt you, you won't take it personally. This is just a very big moment. But stepping away from that, let's dive into a couple things. One, just strict curiosity. Talk to me about your personal journey in crypto, and then how that got into sFox, how that kind of melded into the work you're doing today with sFox.
Sure. Yeah. With my personal background, I'm from Alabama and went to the University of Alabama as well. And there's actually a really great early Bitcoin adopter group to come out of Alabama around the 2012 to 2014 timeframe. Actually, speaking of the conference, the guys from Bitcoin Magazine were around my age at Bama, so I knew them from a couple of campus groups that we were in together. And I saw that they were going to run a magazine for Bitcoin after college, and I didn't really get it. Right? Why aren't these guys going to be investment bankers or go into consulting or something that I thought was the top tier professions at the time. So that was my first introduction to Bitcoin. I didn't really get it at first the way that I get it now. I thought it was more about disrupting credit card fees at the start, and being a competitor to Visa, whereas today I feel it's more of a competitor to money and central banking itself versus these card processing networks. So it's really the base level money, not just a payments technology or way to save money on processing fees or anything like that. But over the years, I kind of grew my knowledge base and grew my conviction. And around 2018, I was in healthcare, working for an urgent care roll up, and really wanted to work in the Bitcoin industry. sFox had just raised a Series A at that time and was kind of growing their team and their operations, and came on. My role has kind of changed a bit over the years. I currently run both the finance and the operations teams. So it's for me personally, having a legal background and also liking accounting and operations and things. It's a great mix for me. I get to see a lot of different areas of the business, from dealing with customer issues to back office work, to then strategic things about where the company's going to grow and the products and services we're going to offer. So it's really, it's been a great gig for me, and I really like working in the industry and seeing where things are going to go.
I love that background, and it's interesting how things start in college and then they seem to kind of trickle into the professional. The I don't know if you want to name drop, but the guys. Okay, so you're saying the guys who started. I think it's called Bitcoin Inc. That's the name of the holding company. I think
Yeah,
that's
they have a
behind.
couple, BTC Inc. or BTC Media. Yeah.
Yeah, because there was another, and now it's no, the guys from the space, the guys where I just were, Wyatt and Tyler, who were actually just on the podcast. We were talking about why they wanted to, launch the space, what that means for Denver, what that means for Bitcoiners in that community. They're also college friends, so it's kind of interesting to see how that comes into the professional light. Now that you've talked a little bit about getting into Bitcoin and getting into crypto, talk to me about sFox. I go on the website. I was just giving you compliments on the website. I think the website is absolutely beautiful. Scale your crypto advantage, right? sFox is the full service crypto prime dealer for institutional investors, providing the liquidity, security, and infrastructure needed to unlock the full potential of digital assets. If you could, with that vision shared, share with me a little bit about what that means to you and where you're really trying to position in the marketplace.
Yeah. So my personal pitch with sFox is, I ask you, Jarrett, like, what's the price of Bitcoin? You might quote me the Gemini price or the Coinbase price or the crypto.com price or Binance price, but there is no the price of Bitcoin, right? Unlike when you trade on the New York Stock Exchange or something, there's not a reference price to Bitcoin. The only thing that we have that is the canonical reference for Bitcoin is the Bitcoin blockchain, right? We're just overlaying this mechanism, this concept of price on top of it for ourselves, for our benefit, right? And what sFox does is we've gone out into the market and created accounts with most all of the big name exchanges, OTCs, and market makers, so that when you come to us, we aggregate all of that liquidity into a single pool, to where if you're trading on sFox, you get access to the best price no matter where it is, right? So we have the smart routing tech in the background to route your order to Coinbase if that's the best price, or to OKX, or to Bitfinex, or to any number of places. And these are people that you might know, like the names I just said, or they might be OTC desks and market makers that you, as an individual, might not really be qualified to get an account with. But we, as a business, can aggregate our volume and get better pricing and do things like that. So it's really about professionals who want to make their lives easier. Some of the things we're going to talk about later, with the complexity of managing wallets and UTXOs and custody and things. Imagine you are a hedge fund manager, and instead of having to have 25 different exchange accounts and credit agreements that you negotiate and all these different things, you can have a single account with sFox. We handle all the smart routing. We have a custody solution as well, but still get access to that best pricing that we can offer in the market. That's really the value prop from a trader's perspective. Kind of alongside of that, we have flexible settlement options for people that want to be more capital efficient and not fully pre-fund every trade from the start. We have a trust company in the state of Wyoming called Safe Trust Company that we run out of the U.S. And we also have some other B2B2C products for people that want to take their existing fintech client base. These could be credit unions, new exchanges that are launching or getting into different geographies, and use our technology and compliance and infrastructure to basically white label our product and then offer it to their existing end users.
I'm glad you brought up OTC because OTC is something that I hear all the time in chatter. I hear people come on this podcast, they'll mention that. I hear if everyone in Bitcoin, we consume media, we consume content, whether it's X, whether it's Noster, whether it's Instagram, YouTube. I could continue the list, but I hear OTC all the time, but I don't really feel like that's a retail level accessible thing, right? That was kind of really at an institutional level, but people say it all the time. And so this is a little bit away from that, but I'm just curious for you to talk on this. Who can really access OTC? Who can really get to those prices?
It does depend, and it varies by desk, really. So, I mean, it helps being a business, right? So if you're an individual coming off the street, you could come and create an account on sFox, and you don't have to create these downstream accounts. You know, you have one API key if you're trading via API. You don't have 20. Things like that make it easier. OTC, yeah, there's there are a lot of things you see on Twitter about OTC desk. There's one kind of funny one about like, oh, there's only 20 coins left on the desk. They're gonna run out of coins and the price is gonna go up. And like that's not really how it works. So be careful what you read on Twitter. But the two what's much more common today than was in the past is having kind of a streaming OTC quote process with your trading counterparty to where they're going to stream you a different laddered tier structure of, okay, we're going to quote you at zero point 0.1 coin, 1, 5, 10, 25, and then they just keep refreshing those quotes, and you can take those as you wish, and then do a bulk net settlement basically end of day or next day for that trading activity. So it's a really good way to be capital efficient, and that's one of the really nice benefits of sFox, honestly, is that you get to just piggyback on all these bespoke credit agreements that we've set up and the different settlement efficiencies that we give you, and you still get the best price that they're streaming.
That was a really good breakdown because I normally don't have anyone that can explain things the way you just did, especially around OTC. Because, like I said, it's an acronym that I hear all the time in crypto. I've been hearing it since 2017.
And what people normally think about with OTC is Telegram chat trading, or hey, I want to, or call somebody up and say, hey, I want to buy 100 Bitcoin. That does happen sometimes, but it's definitely not the standard in today's market.
Yeah, for sure not. So one of the things that we definitely want to get to are UTXOs, but before we get there, and especially how they'll play into a miner standpoint, and I have to say, I was talking with a couple people earlier today at Compass saying, "Hey, I'm hopping on with Daniel at sFox, and one of the things we want to talk about is UTXOs." But I really don't have a lot of personal experience with that. So that's more of a theoretical thing that I kind of understand that, like, okay, if you're going to buy, if you're trying to buy the lemonade stand for 1 Bitcoin, but you only have 2 Bitcoins and half a Bitcoin in a wallet, how does it work? Right. But beyond the theoretical, I'm excited to talk about the practical and then how miners can leverage that knowledge. But before we get into the UTXO conversation, I want to ask where sFox is today as far as supporting miners directly, or what your relationship is currently with the Bitcoin mining industry.
Yeah, we do support miners, both domestically here in the U.S. and in a good number of international jurisdictions. So I can actually make a little referral code for us, for anybody who wants to sign up and try out sFox. But yes, we definitely do support miners. Being just a crypto native business, there are certain areas that don't really understand, for instance, with getting bank accounts and things. A lot of times miners have trouble with getting bank accounts. We love helping people route around those kind of complexities and just use our network to help people get bank accounts. But yes, we definitely do work with miners, and I frankly love to have them as clients. Yeah, so I would love to have anybody come to the site that you'd like.
Lovely. Yeah. I think miners are often the forgotten in the entire industry. And we talked about both being at Bitcoin Nashville, and it was really great this year that they had the miner stage. And towards the miner stage, there was just mining activity everywhere. There was probably I don't know, 15 or 16 pretty big booths, some of the bigger
Oh
booths, and
yeah.
then there was 10 or 15 mini booths, even with a guy who was, I don't know if you saw him at the back of the minor stage. He had like basically bid axes he was making and selling for like $400. And when I was
Yeah, yeah.
waiting to get in to hear Sailor, it's the only way I would have seen him just because he was so kind of pushed back in the corner. But I remember going by and he was just talking to me about it. And he had, I don't know, a couple ASIC chips on the thing, and he was doing. Do you know what I'm talking about?
I
The
do know. Yeah, he's around the Raleigh area. Yeah, so I'm friendly with him as well. And yeah, there's a little subculture with the bid axes of people, slinging a few bid axes and finding a block, and you're just like, come on, man, that's the odds of that are just. But it's actually happened, I think, a couple times now. So I don't know. Maybe they have some good luck on their side.
it has happened a lot more than it should happen probabilistically, and I see it every day on the ocean pool, and I'm always just kind of shocked. But let's dive right in, right, and talk about the UTXOs. And one of the things that Curtis had mentioned when we were setting up this call is like, that we need to talk about UTXOs from the perspective of like what miners should know about UTXOs. And so with that, I kind of want to give you the stage, and I'm not sure if now you want to share. I know we have some visuals that we want to share. Just kind of let me know what that looks like, and let's dive in.
Sure. Yeah. I'll cover just a couple topics, and then we can go into the visuals. The I think just for starters, it's good for people that are less familiar with the concept, just to talk about what UTXOs are and what their purpose is in the system. Um, the simple example that I like is, imagine that you have a wallet, right? This is actually a physical wallet, like you're going to spend at the convenience store, right? In that wallet, you could have a single $100 bill, or you could have 100 $1 bills, or 520s, or anything in between, right? Um, each of those bills in the wallet is a UTXO. And in Bitcoin, you can have a UTXO of any denomination, right? It could be, it doesn't have to be round numbers like in the dollar case. And just to use an example, when you spend, like, let's say you want to buy something for $97 at the convenience store, you got some gas and a few snacks with. If you have $100 bill, you can give the, you can transact with that $100 bill. Um, it's not it's not that the UTXO is kind of like shaved off and you scrape off three from the corner and then you give over the 97. That UTXO is consumed and it's now gone, right? You now get a new UTXO of three for the change back to yourself, and the clerk gets a new UTXO of 97, right? So these UTXOs, the unspent transaction outputs, once they become spent, they're kind of nullified, and then a new one is created in its stead to replace it, right? So as you can imagine, UTXO management matters when, if you go to the convenience store, and maybe they wouldn't be so upset if you gave them 97 $1 bills, but if you gave them 9,700 pennies, you're going to be pissed off, and they are as well, and it's going to be a bad experience. So like that visual is the problem with UTXO management, right? You don't want to end up with a lot of economically unspendable outputs that are going to be either cost you more to spend than they're worth in mining fees when you actually move them again, or just the hassle of it, because the bigger a transaction is and the more UTXOs you combine in a transaction, the bigger it is. So it's more costly to transact it in the future, causing you to incur more mining fees yourself.
And that was a really good example of going in the convenience store, right? You need something for $3, but you have a $100 bill. Can you now translate that into actual real world stuff? Real world, not stuff. A real world example that you've seen with a client, or you've seen with a miner specifically, where you're, because I'm assuming we're talking eventually about hundreds of thousands of dollars if it's at a certain miner, just because things are the way they are now. As we said at the beginning of the episode, Bitcoin is going up like $1,000 every 2 hours, and I don't think sometimes people understand how many billions of dollars that is moving. And I checked Coin Market Cap earlier, right before we recorded, not only for the price, but to look at the amount that's been moved today, and it's over 100 and I think $10 billion or something like that. So we're talking massive amounts. So, anyways, use that dollar $3 in a convenience store, but only have $100 bill. What are some things that you've seen with minors specifically, or another client, but probably with minors? What numbers are we talking about?
Well, from some real world examples, there are one way that I like to think about miners is they're kind of like the ultimate DCA strategy is mining, right? If you're just doing a DCA through some exchange and you're buying 5, 10, 50, $100 a day, you can just do that, use the banking rails to send the money, and then not withdraw from the exchange up until you'd like to. But some people in the past, and this was kind of an unwise thing to do, was they would DCA, $5 a day, and then they would withdraw that every day, so where they're now creating a new $5 UTXO every day, and then after a couple of years, they have 1,000 UTXOs that are all $5 each, and it's going to cost you, in a high fee environment, it might cost you more than $5 to just move that single UTXO. And in a low fee environment, it's still going to be a non-negligible percentage of the value of that single UTXO to consolidate it, right? So this happens both with miners and exchanges. Back in the 2017 market, there was one example I recall from Coinbase where, just because they're more retail facing and just have a lot more on-chain activity than someone like us would have, they had, I think it was $18 million worth of, economically unspendable, essentially dust wallets and UTXOs. So I'm not sure how they cleaned it up. I think they probably just sat on their hands until the fees went down, to 1 sat per VByte, and then tried to consolidate them. But this is a real concern that not only miners have, but exchanges and other high chain use businesses have as well.
That's exactly the example I was looking for, because I hear about UTXO consolidation and there's a bunch of memes on the internet, especially if you're on X, right? And so I'm really glad you just shared that, because that $18 million, I mean, we're just going to keep adding zeros at the end of everything, right? So that's
And
going to
that was
be
that was when Bitcoin was $5,000, right? So
exactly. So now it's 180. And the story in my head is like it's 180 million to a billion to maybe even 2 billion, which is now even such a small percent, because we're getting close to $2 trillion in market cap if we're talking about Bitcoin. That $2 billion in the float in the dust is still not even a percent, which is insane. So, yeah.
it is. Yeah. Yeah, maybe we can look at some of these visuals here and kind of some of this stuff is a little bit hard to think through, but yeah, some of these visuals may help us do that. Um, so
Yeah,
let
let's
me
do
get
that.
that queued up.
And for anyone listening to this on Spotify or Apple or a podcast platform, please go ahead, check the link in the description. I always leave the links to YouTube, and you will need those to be able to see the visuals that Daniel has put together and is sharing with us today. So, Daniel, please talk me through these visuals.
All right, so the first one, first of all, the website we're looking at here is UTXO.live. This is made by a good friend of mine, Steve Jeffress, and he's done some really phenomenal work here. So the way that this is being populated is literally just running a full node and then interpreting, the UTXO set in a particular way here. So the first graphic, this is the current UTXO set as of today at the most recent block approximately. So what we're looking at here is, in the metaphor of the wallet, right? There are about 190 million UTXOs that exist today in the Bitcoin network. And if you were to go through and count all those 190 million UTXOs, they would add up to, about 20 million Bitcoin, which is how many exist today. So quite literally, we're looking at the entire, auditable universe of Bitcoin that exists in the form of UTXOs right now. So I'll highlight a couple different things here. For instance, we look back here at the 2009-10 timeframe. This line here at 50 Bitcoin, these are the Satoshi's UTXOs, right? So each one of these is 50. This is a log scale, so this is 50 Bitcoin each, right? So none of those UTXOs have ever moved. If one of those UTXOs moved for 50 Bitcoin, it would now, that little dot would disappear and it would reappear somewhere on the present day chart for whatever increment it was spent in. So think about this as this is the last time that these Bitcoin have been moved, right? So you see that there are a lot of Bitcoin that get moved on a daily basis, but a lot of them just haven't moved in many years. Going back to 29, 10, 11, 12, 13, right? And a lot of these probably never will. Some of these small ones, are economically unspendable down here as well. So one small thing before we go on is one thing that you'll obviously notice here are these kind of co-parallel lines. What these are people sending Bitcoin in USD denominations, right? And these are people sending at $1, $10, $50, $100, $1,000 dollar increments, and the lines slope downwards because say this is $100, it takes less Bitcoin to send $100 than it used to, so the line slopes down, right? And one really fun thing that we've done with this data and this kind of new understanding is we've written some Python to make it to where you just running a Bitcoin full node can come up with the approximate price of Bitcoin at any point in the past, basically. So it's actually exceptionally accurate within about 1% of the quoted exchange price. And it's a really unique and fun way to look at it. You can actually access this on the website. It's called UTX Oracle. It's just the top thing here, Oracle. And you can download the Python and run it yourself alongside your full node. It's actually quite easy to do if you're interested. So any questions on that one before I move to the other graphics?
Yeah. So one of my question is actually about the Satoshi. Can we go back? Can you zoom back over to the
Oh yeah,
the
so the Satoshi era.
yeah.
Sure.
So what am I looking at? Exactly what am I looking at? That's dust. Like just break down what
So this
exactly
is
that line is. Yeah.
yeah. So this kind of bright orange line here, this is every block. So we're currently on block 870,000 or so. So think about this. There's 870 vertical lines here, and on each of those vertical lines are each of the UTXOs that were spent at that time, right? So this is when Satoshi mined, each of the blocks that he was mining and got 50 Bitcoin right back in that era for the block reward. If those coins had been spent, they would, you start to see some gaps here. I don't know if you can really see, it's so
Yeah.
small,
Yeah. Oh
but
yeah.
there's some gaps here. These are people who have spent their Coinbase rewards, and now those are somewhere else on the graph, right? But the fact that these are still here means they have not been moved since they were mined back in 29, 2010. So like that's a good visual representation that we know that those coins have never moved, and that Satoshi just mined them and then didn't move them.
So going back to the analogy of the convenience store,
Yep.
that's where Satoshi was given a couple $100 bills, right? More than a couple $100 bills, but he has all that Bitcoin and we know the Bitcoin has never been spent because basically it's never been divided, right? Something like that.
Exactly. Yeah. If he had spent, so when Satoshi mines a block, gets a 50 Bitcoin Coinbase reward, if that had transacted, obviously you could be able to look up the transaction, but the way that Bitcoin stores the UTXO set, it's the set of unspent transactions, and that 50 Bitcoin is still in the set of unspent transactions because it hasn't been spent and replaced by another one or more UTXOs after being spent.
Well, as a Bitcoiner, I hope if I go on to UTXO.live, I never see those move. That is great. That was my question on this one. And then I guess the last thing is, I mean, I'm gonna have a lot of questions, so hopefully bear with me. But on where you were talking about, if we go over to the other, they kind of look like heartbeats that were all in rhythm. Can you just speak a little bit more on that again? Because I just think when you see that pattern visually, and please, if you're listening to some podcast, you need to get on YouTube and see this because this is pretty impressive. Break down why it repeats and why it's in a wave.
Yeah. So two of the things you'll see here. One, there are straight, you know, horizontal lines, right? That's
Yep.
someone sending at 1 Bitcoin, at 0.01, at 0.001, and that makes sense, right? Sometimes people send in round Bitcoin increments of, different denominations. The wavy lines are different dollar denominated sends, right? So if I were going to send my cousin
Gotcha.
$100 of Bitcoin from my wallet, I would open my wallet, calculate how much 100 Bitcoin is, and then send it to him,
Okay.
right? That would, say I did this a couple of years ago, that would show as a certain UTXO size, right, on that particular day. And because of the way that the world works, this, thousands of people doing the same exact thing, you get this signal in the UTXO data of a lot of people sending at these round dollar numbers on a daily basis. And because of the way that this is set up, you see those track day to day in the relative size differences that equate to dollar amounts, and you get to see this chart, sort of the inverse price chart, because it takes less Bitcoin, you know, to send $100 than it used to, which
Okay.
is
This
it's really a pretty an amazing thing.
it almost goes back to your original thought on Bitcoin that is this replacing credit card companies, right? And the fees. Um, so the perfect horizontals are just denominated in Bitcoin, and when they're not, it's because they're denominated in fiat at that moment, and that's why they almost look like they're in lockstep.
Yeah, and I'm using dollars as an example just because we've looked at the data pretty closely, and like
Mhm.
if you try to look up, the euro signal or the pound signal, there's not enough activity in those to see a real signal, but the dollar definitely has a this. So I think it's really only the dollar signal that you're seeing here. Yeah,
Okay, cool. Yes, please let's go on to the next tab and the next visual.
cool. So the next one we're going to look at, this is an example of so take a single day. This is the day for May 8th, 2024, and there are, call it 250,000 transactions that happen on that day. This is a representation of where those 250,000 transactions came from. So they were all spent on May 8th, but the last time they were spent was this chart. So some of them were spent, 2013, not very many in 2013, a little 2014, and then a lot of these are just getting churned over and over again for some economic use that that you got something last week and now you're moving it again. So that's that really bright, sunspot looking thing. So this is an example of a pretty average day where nothing really strikes you. It's a pretty normal distribution of things, and there's not many things in the history um, that really stand out to you as really meaningful. Um, Good on this one.
Yeah, it's great.
So that's
Wonderful.
an example standard day. Um, this one is a little bit different here. You see, this mid 2013 section clearly stands out for a couple of reasons. One is, this is not a random distribution, right? They're all on this basically same day, where these coins, and this is from September 6th. So on September 6th, some entity or person or something, moved a lot of coins that are actually really small denomination that were last moved in early 2013. So, I mean, the Bitcoin blockchain is just a gold mine of interesting analytics, right? The fact that you can just see all these things happening and make some inferences of it is really, it's very fun from a data perspective. So I'd encourage people to just explore the thing. But this is what I would call an example of kind of like a hodler. This is someone who, we don't know exactly what it is, but it's someone who had a lot of UTXOs that were created, around the same time. This is not a single day, but this is a small period, right? A month or so. And then they spent all of these on the same day in September of this year, right? So they're consolidating or doing something with all those back from this other period. So this is kind of like the hodler example. Um, the third example is from a miner's perspective. So com- comparing this one, this is September 1st of this year. You obviously see something that stands out being different here, right? There's this long, multi-year, um, uh, kind of rectangle that shows in the data, and this is, can't say certainly, but like very highly likely a miner, right? This is someone who gets payouts in, relatively small denominations. They started here and they've kept, doing whatever operation they're doing up until essentially the present day, and now they're moving all of these. This is probably, tens of thousands of UTXOs in this rectangle here. So they're moving all of those on September 1st, and reconsolidating those probably in some you know, bigger UTXOs. So you might combine these 10,000 UTXOs into, 3 or 4 or 20 small, like larger denominations. So this is a good example of what it would look like on chain from a large miner that's running a consolidation of many small, payouts that happened over a multi-year period.
So, staying with this image, because obviously our audience is the Bitcoin mining industry, talk to me. And I love the forensics you've done, because basically you're able to look back at the data and be like, this vertical one is a hodler. This horizontal one is likely a miner. If a miner, talk to me about a use case you guys see a lot with mining that sFox is totally prepared to support and to help miners with. Is it something like this? Like, hey, we need help, consolidating all our UTXOs because of X, Y, and Z. What does it look like? And what are the, uh, I don't know if you want to use this as an example and kind of build off this in a hypothetical, or use a real world example. But please, like, what is it that miners should know about the UTXOs, and where is the value add and the reason why miners need to come to sFox?
Yeah, sure. On the data point, I totally agree with you. Steve did such a fantastic job making this website and helping me pull these examples, to show these things. That it's really nice to be able to see something related to Bitcoin instead of just reading about it or talking about it. So this would almost certainly be someone who is, signed up on a pool. They're getting their periodic distributions, and they're getting those just straight into cold storage, and then they're consolidating from cold storage either to an exchange or to an upgraded, custody setup. So one of the nice things from the sFox perspective is we don't regularly have miners, depositing directly to their exchange account, from directly from a pool. Theoretically, that would be okay to do, but we don't see it happen all that frequently. So from a miner's perspective, the main thing to think about is making sure that you are setting your minimum payout to be economically viable, right? So you don't want to be getting these $5 UTXOs, right? You also don't need to, I would say, to optimize for your use case. So for example, if you know you're not going to be needing to sell much or any of your Bitcoin that you're actively mining, and you can pay for electricity and other expenses from other source of income or savings, I would say to make your UTXOs a bit larger and to do less frequent, withdrawals or payouts from your pool, just to make your life a little bit easier on the back end when you're consolidating or spending in the future. That is very important, and also just understanding what your use case is going to be after the fact. So if you're just going to, are you planning to ultimately sell your Bitcoin for dollars, or are you planning to spend that Bitcoin in the Bitcoin ecosystem? Right there, I think you might come to different conclusions depending on the answer to that question. And then also, like, let's say you're going to sell for dollars eventually. Um, do you have an exchange account that has features like flexible settlement, to where, say we wake up in the morning and Apple announced that they bought 100,000, sorry, $100 billion of Bitcoin, right? Price would go nuts, and the mempool would be so backed up, and the fee rates would be astronomical. So it'd be great for your mining business, but if you yourself are trying to spend your coins that you've got in cold storage to sell back to dollars, then you might be in trouble there. So having an exchange partner who has things like flexible settlement to where you can go ahead and sell on the exchange platform as a hedge and then work out your custody and send the coins either later that day or later that week or sometime in the future when the mempool has cleared out a bit. That could help you economically as well to avoid the urgency of trying to do a mass consolidation all at once. You end up paying unnecessarily high fees and reducing your stack when you don't necessarily need to.
Yeah, I love that hypothetical. Yeah. When you said 100,000, I'm like, oh wow, if they bought 100,000 Bitcoin, that'd be nice. That's about half of Sailor's stack at MicroStrategy.
Yeah,
And then maybe you were thinking $100,000, and it's like, no, I feel like that's the Doctor Evil meme. $1 million.
we're beyond that now.
We're a little bit beyond that. So this is great. I think UTXO consolidation is something huge. And as you said earlier, we're thinking about Coinbase as an exchange that has a bunch of ins and outs, and they're going to have those unspent outputs kind of hanging out. And that was 18 million, and Bitcoin was $5,000. So Bitcoin is now almost 20x that, and just the amount of liquidity daily is much greater than it was then. If there's a miner and they want to work with you, there's tons of pubcos, there's tons of private miners. There's also just, plebs who have 20 miners in a shed, and they probably need some support on this, depending upon how often they're getting paid out from their pool, or, however that's set up. What's the easiest way for for people to start that relationship with sFox? Is there a client? Is it a retainer? And now I'm just also just being curious myself.
Yeah. So we have one of the nice things about sFox is that we're not, you can come in off the street as a retail person and create an account, but 95+% of our clients are going to be businesses or professional investors who are kind of like the pro retail side of things. So that type of person, somebody who is sophisticated and really has a business need for getting best price execution and all the other things we offer. We can have a personal relationship with our clients in a way that other people can't, just because they're overrun with 10 million clients, right? Which is really nice, and I like that, honestly. So yeah, I'll be happy to put my email in the show notes and have people contact me. It's dhinton at sfox.com, HINTON. And yeah, I'd be happy to get you in touch with somebody else on our team who can work with you to get set up. And yeah, we do take a hands-on kind of white glove approach to this kind of thing, and would love working with anybody who's interested.
Yeah, amazing. And so I've kind of called out the website. I think it's wonderful. I think people should definitely go check it. And that is sfox.com. I'm going to leave that below in the episode's description. I'll also put your email down in the episode description. Is it okay if I add your LinkedIn? LinkedIn is a place where I feel like a lot of business, B2B and B2C, happens in Bitcoin, crypto, and mining.
Yeah, absolutely. Yep. You'll find me under Daniel Hinton there.
Amazing. Well, this has been great. And this is one of the first episodes where I have had 4 visuals from a guest, and they've been, I said forensics, right? It's Bitcoin forensics. You were
Yeah,
like
yeah.
dusting off fossils, and big thank you. I think it was Steve.
Steve, yeah.
Big thanks to Steve for putting that together, because that was one of the questions I had. I was like, how did he come across that on, September 6th, I think it was, there was all of this activity. So super helpful. If you're watching this on YouTube, please go ahead and subscribe. If you're listening to this on a podcast platform, please go ahead and subscribe. Make sure you're following us at Compass Mining on X, LinkedIn, and YouTube. Daniel, thank you once again for your time. And we didn't hit 100K during the recording, so maybe tonight.
Maybe tonight, yeah, soon.
Thanks.
Thanks, Jared.